Hi everyone, hope you're all doing well out there. Today we're going to talk about a stock that is absolutely skyrocketing. What is not skyrocketing is this pen. I have to write in this off. It went in the bin. I think that's the last whiteboard I'm going to do with that pen. But yeah, we're going to talk about a stock that is skyrocketing, and overall the stock market after what was a pretty ugly Monday, Tuesday, Wednesday. Yesterday was a pretty good day, and Friday's looking pretty good overall, and there's definitely been a bit of a recovery going on in my account personally, and a few stocks that are doing quite well, and a few stocks that actually brought out earnings and then dipped, and there's been a bit of a recovery going on in the background. So I thought I'd quickly talk about a few of those stocks, so I hope you enjoyed the video as always, guys. If you could, hit the like button and I'll get started on today's video. So some little good news that came out from the UK's economy. Whenever we have good news, it hardly is mentioned. When we have bad news, it's everywhere in the UK. When the UK economy has bad news, it's everywhere. So I'll just point this out really quickly. The UK exits recession with fastest growth in 2 years. A lot of people saying the worst of the UK economy is behind us now, and in Q1 24 we came out with 0.6% growth. So yeah, really good. I actually didn't really expect it to be that good, to be honest with you, but yeah, obviously really good news. I think a lot of UK stocks are having a bit of a bump up this morning because of this news. So yeah, really positive, and hopefully some of those share prices that have been absolutely in the dumps from the UK side of it maybe have a little bit of a rise at the moment. Next one, Hims & Hers, good recovery yesterday. Stock was up 6%. It is going green in pre-market, but we'll see where that ends up. But yeah, a really good recovery because we had earnings came out, the stock kind of dropped off after we had the big rise in earnings. It fell nearly 14%, and then since then the stock is back up 11%. So we're starting to push up to where we were after the jump of earnings, which is really good to see. And I think a few people were panicking. I think a few people saw these earnings, and I was starting to see the defeated comments out there. I saw people going, "Oh no, everything's going wrong. When's this stock going to go up? Oh, I've had this stock for a few years. It's never going to reward the financials." And it's like, chill out, guys. Like, you got to remember, only like in 2023 we were a $6 stock, and we're up to $12 now. Like, we don't go to a $50 stock overnight. That's not too bad at all. I think we're still a little bit undervalued here, but let's not get too carried away here. And I think everyone kind of got a bit defeated, and obviously there was some reaction to like the CEO comments that we've talked about before, and hopefully those CEO comments don't happen again, and that will obviously help the share price. But I think people just got a bit stuck on the short term and not forgetting, like, we're not in this for what the CEO's tweeting, you know. Obviously it helps that obviously it does calm down a little bit, but the big thing is the financials, guys. You know, stare at the financials. Anyone that read those earnings report, I don't know why you're panicking, because if they keep doing those earnings report and you come back to this stock in like 3-4 years time, it's not going to be a $12 stock, guys. And you might be closer to your $50 stock then. But, you know, look at the financials, guys, and don't get stuck in the short term. I saw so many people panicking. You know, I've had so many comments in the last few days about Hims & Hers, and why has that happened? Because the share price, you know, all this fear around it. Ignore the noise, guys. You know, when the stock was going up like this, I never got any comments on Hims & Hers. And then as soon as the last kind of couple of days have happened, like, I've had millions of comments, and people just get stuck in the short term, guys. If you're a long-term investor, guys, which I am, you know, if you're not a long-term investor and you're watching my channel, I don't know why you're watching my channel, but, you know, if you're an actual long-term investor, guys, just stare at the financials. Just go back and look at those earnings report and say, why panic? You know, stop worrying yourself. This is the point of long-term investing, is that you don't have to worry too much. Just sit back and let it do its thing and come back in 3 years, guys, honestly. And there's been a few price target hikes going up in the background, which has probably also helped the stock. We had another one here that came out, and it's with a price target of $24. The company's closed yesterday at $11.65. That's a lot of upside. And as well, the guy that gave this upgrade, Aaron, I never know when it's double A, but he from Seaport Global actually is on tip ranks, ranked 80 out of 8,771 analysts. So very, very good analyst here, and very good track record of upgrading it. And the fact that he's put a double on where the share price is very, very impressive. I'm surprised this didn't get more media attention actually in the background. Celsius as well. I mean, we saw the stock come out, I think, was it Monday? It brought earnings out. It was an $80 stock. Since then, you know, the stock fell a good 9%. I think it was down 15% at one point on Tuesday morning, or Monday morning. Fell massively, and obviously, you know, a few people were concerned about the inventory issue. they came out and said it's just a short-term thing. Seems like Wall Street believed them, and now you've got Celsius that is now higher than where it was before it released earnings. And a lot of people were panicking because when they brought these earnings out, obviously the EPS were good, but the revenue was a fair bit of a miss. And they came out and said, look, it's just inventory issues. We had higher overload in the first quarter last year, and this quarter we don't have the inventory going out, so everything's okay. If it wasn't for that, we'd have grown 60%, and the market believed them, which was quite surprising to see. So yeah, that was a very volatile one this week, and then has gone on to recover it. So anyone that bought the dip on after earnings, that when it was down like 10-15%, you're absolutely laughing. And same with Hims and Hers. If you bought the dip on Hims and Hers as well. And it goes for the next one, this Airtel Africa, UK stock. So I've owned Airtel Africa since around about 2020 time, and it was a stock I was actually up on a lot. I was up over, since I bought it was up 270%. I was up about 100% because I kept averaging up on the position. And during this time frame, I kept averaging up, and also it's the combination of going down. I'm only up about 15% now, which is absolutely crazy to see on Airtel Africa. I think it's had basically like 2 years of the share price doing absolutely nothing. And also you're collecting nearly a 4% dividend yield, which isn't that bad at all, is it? But they came out with their earnings the other day, and we saw the same thing. The earnings came out, the stock dipped massively. I think it's not registered on this chart, but it might have been even lower than that. Massive. And then from the lows, it rallied up. So anyone, once again, we've seen this combination where some stocks have been dipping loads, and then they've had this massive recovery. It's been a swing trader's dream at the moment. But once again, I look at this company here and I think, that they're getting impacted by a lot of currency impacts at the moment. And if you look past the currency impact here, so revenue in constant currency was up 20%. If you look at the EBITDA increased 21%. And when we look at the numbers on a currency neutral basis, revenue was smashing it, EBITDA margin. But the problem is that you've got to take the currency impacts. So there's the devaluation of the Nigerian currency going on at the moment, and obviously that puts the numbers look a lot worse than what it is. And if this currency impact goes, and hopefully this is the year it does go, and I think it will go at some point. If we talk about a company that's going to be growing at 20%, 21% EBITDA, and the profitability of this company is going to be thrown off, this company is going to be around about like 6 times earnings. And obviously there's going to be some form of having this company at a lower multiple because of this currency impact and how much it can affect them. But if it goes out of the way, you talk about a company that grows at 20% and the growth and the profitability, it's not probably going to stay at 6 times earnings. So yeah, we'll keep an eye on that one, but that was an interesting move. The last one that had a very big move and skyrocketed up was Fiverr. Absolutely fantastic day from Fiverr, up 10%. Now they brought out their earnings and they looked pretty good. Non-GAAP EPS was a beat by 0.07. Revenue 6% growth, beat by 1 million as well. So really good numbers, and they also hiked up the guidance a little bit as well. Overall, it's trading at 10 times forward earnings, which isn't that bad at all. And also they've got a big buyback going on in the background. I think it's about 100 million buyback, which is over 10% of the market cap as well. So that's going to also improve the EPS and the forward P that's going to be coming up as well, which is worth factoring in. So that's something in the background. Fiverr, I saw the last update, and it made me a little bit nervous to go and actually go buy any more shares. I was looking at that and I was thinking, oh, that update was a little bit away from what analysts were expecting. And looking back now, I think that maybe analysts, because if you look at the growth they did last year and then the growth that they were expecting this year, I was like, that is quite a big jump up. So looking back at it, I think maybe analysts were a little bit just too bullish on a rebound, especially in this macro environment. With the new valuation in at 10 times forward earnings, I think with 100 million buyback going on and this EPS growth and also this revenue growth, I don't think it's too bad at all. I do like a little bit of Fiverr. I wouldn't put it in a portfolio as a large position, because it just doesn't have that kind of big moat, and also you've got maybe the disruption of AI. The big question I was getting on Fiverr is like AI and the disruption, which, yeah, potentially that could happen, but at the same time, Fiverr's rotating to more like longer term projects, which is harder for AI to do. So the classic like thumbnails, like if you're a YouTuber, you go on Fiverr, you get your thumbnails done. They're moving away from that sort of business to more like long-term projects that take like weeks to do, and that's quite hard for AI to do that. So that's the kind of protection that Fiverr are going down to, like protect them against the AI sort of situation. So there's that risk there. The only little number that bugged me a little bit here is that the take rate did go up. It went from 32% up to 30%. which was an increase of 1.9% basically. So that's something just to keep an eye on, because when you do look at active buyers was down 9% year over year. So the combination of the take rate might be covering the cracks a little bit, and the active buyers did go down a little bit. You don't want to see that. I'm happy with active buyers being flat, not going down. So that was my only little trouble that I saw with these numbers, and it's something to keep an eye on. So that's what I'm personally watching out for in this business as my little concern in the background. But overall, I think the numbers were, the big thing was the top and bottom line were very good, especially at 10 times forward earnings. I think that's pretty okay from my point of view. So yeah, I'm watching Fiverr. Obviously, it's a stock I own, and I was happy with the update and a little bit more clarity that we're still doing okay over in Fiverr. So yeah, that's the video today, guys. Talk about the UK economy. A lot of stocks moving, dropping off earnings, recovering off earnings. I mean, growth stocks in general. There's been a lot of growth stocks this week that have they've dropped absolutely huge as well off earnings, and a bit on Airtel, Celsius, and Fiverr. Some really good earnings from Fiverr, and the stock had a really good move yesterday. Anyway, that's the video for today, guys. I might see you on the weekend. I've got my UK stocks to be buying video to do at some point. I've got a update on the best stocks and shares ISA for 2024 to come out as well. And on the Patreon, I'm going to try and get another exclusive video to you guys. I'm going to try and do an earnings review from this week as well. So yeah, there's a lot going on, hopefully on the YouTube channel on the weekend, and on the Patreon. I've got a lot to do for you guys. So yeah, keep your eyes open anyway. And yeah, thanks for watching, guys. See you in a bit.